that we could be witnessing more in the future. This trend is not over by any stretch of the imagination, according to these charts.
You said the move in gold was something you've never seen before. It didn't just touch a new high. I mean, it exploded past $3,200. What exactly is different about the setup here, Gary? And what in the charts really triggered that reaction from you?
Well, if you pull up a chart, what I'm looking at is a 4-hour short-term Heikin Ashi chart. The difference between this type of chart and a candlestick chart is how it fixes the open. In a candlestick chart, the open is the opening price, high, low, and closing price. In a Heikin Ashi, the open is fixed as the midpoint of the prior candle. And so what you get is an average, and that's why it smooths everything out. And you can see that when we look in history, you typically get, even as a market moves higher, you get spurts of ascent and then small corrections, like 2 steps forward, 1 step back, 2 steps forward, 1 step back. And so this is typically what we see in a market that's moving higher. Here, right around the 25th of March, we really saw it take off, but I have very rarely, if ever, seen a scenario in which we had this many large green candles. And let me explain why that is so significant. In a Heikin Ashi, you look for 2 things. One, the absence of lower wicks, because as a marketplace begins to lose its trend, and realize the best thing this type of chart does is display in a very graphic way the strength of a trend. And so when you have these lower wicks on the way up on green candles or upper wicks on the way down, it tells you the trend is losing momentum. When you have small bodied candles, as you have here, the trend is not that strong. And so if you look, we've got all of these consistent Heikin Ashi candles on a 4-hour basis. This is over the 3 days where we saw gold move tremendously. Began with a doji candle, open and close being the same right here, and no lower wicks and huge body size up until the end of the week. And then this is what we've seen on Monday and Tuesday. And so I've never seen this many concurrent green Heikin Ashi candles. And to give you an example, I can pull this back far, but you'll see what I mean. Even during a time when gold is going up, it's not parabolic. And this is how a parabolic chart looks in this format, a Heikin Ashi format. And that's exciting because that tells me that the best thing we can hope for in terms of gold moving higher is a sideways market. In other words, you get this big spurt up, then you have a period of consolidation in which gold builds a base at this new level. What you don't want to see is a really strong hard up and then a really strong correction immediately. When you get this sideways action, that's the healthiest thing you can see for a market that you believe is going to go higher. It confirms that we are seeing gold build a base above 3,200, 3,244 on a Heikin Ashi. And if we convert this, you'll see the difference. This is a standard candlestick chart. So you see we've got big spurts. We do have days in which gold closed below it. And although it is a parabolic move, and especially if we move to a daily, you'll see that, but it is certainly not as impressive as this. And that's what got me really, really aware that we could be witnessing more in the future. This trend is not over by any stretch of the imagination, according to these charts.
Right, right. So I guess we're looking at the beginning of a new leg higher here then?
Well, right now, the best thing we could see after the kind of move we witnessed is consolidation. Like you get right here, The market moves up. It gives back a little bit, but you see it sideways. And that's a market that is testing a new level that it has not been at either ever or for a while before returning to the bullish demeanor. Here is the correction that we saw when we saw gold come down hard for 3 days. And that's the other thing that impressed me. The move down was incredible. I think it was $52, followed by an $82 decline, and then another $50 decline. And you had that here, and then the ascent totally took out the tops, went to new all-time record highs. And rather than coming in Monday morning or Sunday in Australia and selling off, it's trading sideways. Mm-hmm. That is impressive.
Okay. So, I mean, are you seeing any fresh resistance there? I mean, I talked to a couple of analysts and they thought maybe there was some exhaustion here, but it doesn't really look like what you're talking about. I mentioned you mentioned that new base at 3,000. Are we looking at, these Fibonacci targets towards 34, 36 range? Is there a new technical ceiling in sight?
I will give you where I definitely have to have updated my upper level target based on what we're seeing.
Right.
Right now, we are in uncharted territory. We've never been here before. So I do have a technique to forecast where I believe it will go and how high it might get. And it's a 30 to 60 day timeline. But right now, you can see that gold's trading modestly higher, yesterday modestly lower. But if you consider what we are looking at, 4th of February, tariffs go into effect. And we see a slow and methodical climb. And below it, we have moving averages, 20-day in purple, 50-day, which is the most important indicator in terms of a moving average to determine whether or not gold is in a short-term bullish or bearish trend. And what's impressive is we had a very strong correction, as I said, 50, 80, 50, right? But look at where the lows came in at just below, and look at where the close came in above the 50-day. It says that there was no technical chart damage. If anything, it stayed above that. Then on Tuesday, we have that doji. And remember, a doji is one in which you have balance between the bullish faction and the bearish faction, where neither faction is able to muster the momentum to move it higher or lower. And that's where you get an open and close that are identical or 1 or 2 ticks apart, followed by this strong update. And that, of course, this occurred on the 9th when the administration announced that he was raising tariffs to 145% with China. And I also believe the 90-day pause. So we know what that did to U.S. equities, and we saw what that did to gold. It took gold from $3,000 to $3,250, a $250 move in a 3-day time period. And that's what really got my attention. Absolutely.
Okay, so you're coming back here. I mean, that base that you talked around 3,000, how important is it here? Because if you flip to the downside risk, if we do see a retracement, I mean, is that kind of the critical area where bulls need to hold?
The 50-day is. Now, This is also, if we measure from the low that came in last day of February, 28.90, up to this top, and then this correction, it was a 61.8% Fibonacci retracement, which is a deep but acceptable correction. And when I say acceptable, you can have a correction that deep and still, on a technical basis, be at a full bullish demeanor. Mm-hmm. It hasn't caused any major technical chart damage. A break below that would on a closing basis. This is the interim term, 100-day, and look at how far below the 200-day is. It's sitting at 2,700. There's good distance between these, and they are widening. So whenever you have them coming together or closer, that is not what you want to see. But you want to see those levels expand in terms of the difference between the pricing.
Can you chart it into the future too, Gary? I mean, the next ceiling there, what is it, 3,400?
Well, here's what I'm looking at. When you have uncharted territory, and let me move this to a standard candlestick chart, I'm using what's called a Fibonacci extension. And this is what I'm looking at in terms of realistic targets on a technical basis over the next 30 to 60 days. And that is at minimum 3,300, more likely 3,400, and as high as $3,500 per ounce. Wow.